Good morning everyone and welcome to Morning Markets from True Potential. Today we'll look back on asset market performance from last week and then focus on some of the data that we'll see this week and how that will influence asset markets. Before jumping into that, I think the first thing to say is thanks to everybody that has been subscribing on the YouTube channel. If you're watching for the first time or you haven't subscribed as yet, please do hit the subscribe button. So looking at asset markets last week, it was certainly a more bumpy journey for asset markets over the course of the week, and that's equity markets and sovereign bond markets. Probably the best indication that we can get of that volatility is just looking at the graph that you can see at the moment, which looks at the VIX index, or the fear index as it's known. And you can see there a spike up in volatility in the middle of the week when we did see those large down days in the equity markets. I think the other thing to notice and to think about just in terms of the equity market performance last week was very much about growth assets, growth equities, growthier regions, feeling the brunt of that selling pressure over the course of those 2 days. But then looking forward to Thursday and Friday, we saw volatility come down and we saw equity markets have a better performance over the course of the week. Also worth noting that it was more about developed markets ex the US. They had a better day, looking out into a better week, sorry, I should say, looking back into Asia as well. A couple of contrasts there. We saw a good performance from the Chinese equity market over the course of the week. Contrast that with Japan, where Japan was off around 4%, and even into Taiwan, where we saw Taiwan down 8% in the week. Function in Taiwan is really the technology heaviness of that index, but also some rising COVID-19 infection rates in the Taiwanese geography driving some changes in a reappraisal there. Just looking at then sovereign bond markets, they obviously moved in lockstep last week with how equity markets performed. That was very much driven by the news that we got during the week of where inflation had moved to, both at a consumer level and at a producer level in the US. Now we can look at that and we can look at the year-on-year numbers, which does show a strong pickup in inflation, but also looking at the month-on-month numbers, it's also evident there of a pickup in inflation. And that's what's concerning the market. Is this move that we've seen in inflation just a recovery from the lows that we saw last year from COVID-19, so that base effect that has been discussed, or is there something more sustaining about what we're seeing in the price levels? Worth noting that a number of those components that did drive inflation higher were very much things that we would think about as being sort of transitory. So used car prices, for example, up around 10%. That's very much a function of the challenges that we have with semiconductors and how that's impacting the manufacture of new cars. So one would hope that as an example, would be something that would just naturally drop away over the coming months. Just looking to the week ahead then, we've got a lot of data this week, and indeed trying to sort of distill it down into just a couple of points that we're focusing on is quite difficult. But starting here in the UK, a lot of data in terms of employment reports. We also get retail sales details. We'll get a sense of how the UK economy continues to recover and how we're seeing that positive impact coming through from the vaccination rates. Looking into the US, I think a large focus there will be certainly on the minutes from the last FOMC meeting, just to see if there's anything that can be gleaned of that in terms of how the Federal Reserve are thinking about the direction of inflation. In Europe, very much across, as it is in the case of the US and the UK, we get PMI data, so Purchasing Managers' Indices for both manufacturing and services. Again, very much to see the direction of travel there. We should continue to see improvement in Europe, particularly as it relates to services, whereas we might be contrasting that with the US data, which might show a little decline from those high levels that we've reached over the past number of months. In Asia, we'll get data out from Japan and also China. Indeed, China this morning, we've seen very strong retail sales numbers and also industrial production on a year-on-year basis, I would add. If we look at it on a month-on-month basis, we can certainly see the slowdown that's evident there in those data prints. And that's to be expected just given the large numbers that we've been discussing in terms of year-on-year growth rates over the past number of weeks. I'll leave it there for today. Please do join us again tomorrow.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.